Hello and welcome back to our channel. Again, we came after 1 month. I am a little bit busy with my studies and all these things. So now I am finally free of this and I get some time to make a video. So today we are going to discuss about a very important concept. That is about how the banks, how the Indian banks, how the world banks, how the commercial banks create own money and that lends to the people, and how the commercial banks create the credit into the economy. It is very difficult, not a difficult concept of course, but it is very important concept for anyone who was studying the finance, studies economy, anything you are studying, or if you are a general people, if you are not studying anything. But for your knowledge, it is very important to know how the banking are working, how the banks are working. So today we are going to deep dive into this particular topic, how the commercial banks create the credit creation. So at the very first, I am directly go through with a slide. Let's see what this first slide says. It's about the title, how commercial banks create credit. Banks can create deposit far larger than the original cash flow. What this means? If you deposit 1,000 rupees into the bank can create from this 1,000 5,000 rupees. And how? This is how the bank does this. We are going to discuss in this particular video. Okay, if something, take an example, you go to the HDFC bank, suppose you deposit 1,000 rupees and you are getting 15% interest onto that. Okay, and bank is earning 20%. What is the marginal gap there? The gap is 5%, right? So you are thinking that by your 1,000 rupees, bank is only earning is 5,000, 5%. But actually thing is not that. Bank is earning much more than that. So how the bank is earning much more than that, we are going to discuss in this particular video only. Okay, now see, key bank lending multiples money through repeated deposit and reserves. There is a various concept in the banking sector, that is that like the deposits and the reserves. So what is this? We are going to discuss later. Now see, for understanding this, we have to take care of two big assumptions. Okay, just for the understanding of yours, we are taking the big assumptions. It is not really what in the practical life, but it is the assumption which helps you to understand. And when you understand the concept, you will relate how the banks works. Okay, but for that we are taking the assumption. At very first, that is the banking system is equal to one bank. We have to consider that the entire commercial banking system is one unit and all is termed as a bank. Means there is no SBI, no HDFC, no ICICI, no UCO, no other banks. There is only one bank, and we are considering there is only one bank. That name is SBI. Okay, in the whole economy, there is just only one bank, that is SBI. We are considering here for the example, right? And the second example is that all transaction go through banks. Means in the economy, all the transaction happens. All the transaction happen in the economy that goes through with bank. There is no cash payment, there is no UPI payment. UPI payment can be done, but there is no cash payment. Means I cannot give you any cash. I cannot transact without a bank. Means all the transaction happens through checks. All the transaction can be happen through demand letters, deposit, demand drafts, can be happen through UPI, and this of the stars. Means all transaction in the economy. For this, understand these topics we are considering, there is no cash transaction at all. Okay, so what I is saying this, all receipts and payments in the economy are routed through banks. Another assumption is that the deposit held by bank are used for giving loans. However, bank cannot use whole deposit for the lenders. Means the deposit bank are receiving, they are only use it for giving loans. Okay, bank can use the deposit for various users, but here we are considering that bank is only using the deposit for providing loan, and from this deposit they cut a rate, they cut a percentage for the liquidity. That is called as you guys already know about the LRR, means legal reserve ratio. SLR is there, so they are taking some percentage for that. Okay, why they charge that, I will explain to you later. And another assumption is that it is largely compulsory for the banks to keep a certain minimum fraction of their deposit as a reserve, known as legal reserve ratio. Now it is a very important concept if you are new to the financial what is legal reserve ratio, right? Let's suppose you deposit 1,000 rupees into the bank and tomorrow you need some money, you need 100 rupees. If bank gives the loan to the another person for 1,000 rupees, so when you came back to the bank and you ask for your 100 rupees, they cannot meet the obligations, right? When you are depositing something, that is a liability for the bank. When you are depositing something into the bank, that is a liability. So what bank they do for the need of the liquidation, for the need of the working capital, what they do, they keep our money's percentage of money aside for the liquidation. Suppose you deposit 50 lakhs and you withdrawing 10 lakhs. Bank have the 10 lakh already. And it is in a large volume, okay? I am just here taking the one example as one people, but it is not actually like that. Many people are investing, many people giving the FD, many people depositing the money. How many people are taking full money in once? That is a very small number. So bank can easily meet that, and that's rate how much is the percentage of that money as if to be saved. That is fully decided by the RBI. When RBI thinks that then needs to change the rate of that, they decided that, okay? And that can be a policy of RBI monetary policy also, part of the monetary policy, right? So here is we got the two assumptions, right? Now see, already we talked about that reserve requirement and lending constant, legal reserve ratio, LRR, the percentage or the fraction you need for the deposit. We already talked about that. Just go and read this, okay? Now we are going to the second last slide. This slide I am going to discuss about with an example. You can just go through with the things that how the things are working. Like there is LRR ratio we have discussed that if you deposit 1,000 rupees, bank can lend 800. Why? There is LRR of you see LRR, that is LRR of 20%. So what is the 20% of 800? Sorry, 1,000. It is 200. So bank have to save 200 and bank can lend 800, right? So bank what they did 800, and when they give a loan to someone, and what he did, he also come back to the bank and he gives back to the money the bank, and he also deposit 800, and bank again charge 20% LRR and give the lend of 640. We are going to discuss it a little bit with a paragraph. Let's see what is we are doing there. Let's see this. This is a very good rounded table. Okay, what do we call that? Suppose we are considering here 3 round, and there is a deposit column, there is a loan column, and then there is a cash reserve ratios column, LRR. So what you do it? Okay, we are taking an example. By the example, we are going to discuss what is going on. Let's suppose you are Ram. Your name is Ram. You go to the bank and you deposit 1,000, the first row. And by this 1,000, you after deposit, what bank did? Bank gives 800 to the loan because 20% is my legal reserve ratio. So I saved. So bank wanted it. Bank keep the money of 200 with them, and other 800 they lend to the people who needs the money, right? Who needs the loan, they give it to them. The route 2, this 800 people, because you already considering that all the cash flows in the money market, all the cash flows in the economy is held only by the bank. So what they did in the round 2, you are Ram, okay? Now Sham comes in the story. So Sham takes the loan of 800 and he deposit to the bank. Again, by this 800 he takes loan and he deposit to the bank. Because we are taking assumption that all the transaction happened in the economy through only the bank. So what he did, he gives to the money to the 800 to the bank, and again they charge of 20% of legal reserve ratio, and bank gives sham money to another, that is 640 to the another person. And what they did, they saved CRR as 160 of 800, which is a 20% of 800, right? Now Ram and Sham take the loan and they deposit the money. These things are over. Now another person come. Let's say it's Priya. Priya comes to the round two, and what he did, he took the loan of 640. Okay, and here also bank what they did, bank again goes back and checks what is the legal reserve ratio. They check it is 20%. So what is the 20% of the 640? It is 128, and they kept 128 with the bank and lent 512 to the people who needs the money, who takes the loan of 512. So see, in the round 3, again when we came, like suppose now Robbie goes to the bank and he takes the loan of 512, and bank agrees what is my legal reserve ratio? It is 20%. Now see, 20%. So what is the 20% of 512? It is 102. So bank kept 102 with them, and then again came back and 410. They got the money for loan. Okay, they gives to the people for the loan. Now just say about the assumption of the total point. Now initially we deposit how much money? 1,000. But now what is the total amount of deposit? It becomes 5,000. How much? It's become 5,000. Now how much loan bank provides? It's about the 4,000. And how much CRR in the bank has? 1,000. So if we made a sum of total deposit, total loans and total reserve ratio, how much money is there? 10,000. Can you see the magic? Initially we deposit 1,000 rupees. Initially we deposit just 1,000 rupees. Now it's become 10,000 rupees. How the bank do it? In this table, if you are preparing for any exam, just keep this table with you. This is a very helpful table, because just look at the things, how bank create the money. How bank create the money? You just deposit 1,000 and bank makes that 10,000. 10x. Okay. So whenever you are going for a bank loan, a bank deposit, or you are thinking that bank is earning the 5% interest, not like that. Bank is earning much more than that, right? Because by this 1,000, bank create 10,000, and within the 10,000, they already keep the 4,000 for lending, and 1,000 the saved as legal reserve ratio. Agar kal ko aapko, look, now see this step. Okay, bank now has, after the round 3, bank has total CRR of 1,000, right? Now, if the initial depositor, who is the initial depositor in our case, it is Ram. If Ram comes to the bank and he asks for his 1,000, bank can provide. Yes. Yes or no? Yes, bank can provide. In the round 2, Sham can also, if he wants his 800 rupees back, he can also take, right? In the round 2, we consider as a Priya. Priya, if comes, he wants his 640. Bank can also provide a 640 from the 1,000 CRR total legal reserve ratio. What is the 1,000? Bank can easily provide. In the round 3 also bank can provide. But the question is that if all comes together and they're asking for the money, what will happen? Bank will collapse. But in the practical world, it doesn't happen. If happened that once in a world happened these things, like when the notebandi happened, if you know there is a bank, didn't take the bank's name, just Google it. There is a bank who face this problem, because a lot of people comes to them. What is a notebandi happen? A lot of people comes to them and they want back their money from this particular bank, because there is some misinformation spread in the market. Then what they did, they made a press conference with the HDFC chairman, because HDFC is known for very good bank, right? The private sector, they are a very good bank. So they made a press conference for tell the people that everything is okay. And when HDFC banks, the chairperson called that if everything is okay, they said, okay, it's right, it's okay. Then the things can be fixed. So this is the basic topic you have in this particular chapter. So a particular thing, that is the legal reserve ratio. We already talked about that. And last time in the conclusion, I can say that from the above table, we have observed that the initial deposit is the 5 times of reserve maintained by the bank. There is a 5 times value of multiplier. We are considering a multiplier, like 1,000 becomes 10,000. That's the multiplier of 5 times. So this is the things we have to just take care of. Just go through with this table. This table will help you a lot. And I hope you guys enjoy the video. You guys understand the things. If you didn't understand anything, please comment it down. I will of course reply. Thank you. Thank you for watching us. Thank you very much. Thank you.